show you step by step how an order block looks like and how to trade an order block, how to trade the fair value gap. So in my video, so please, before I continue, please tap down the subscription button, like, share, comment, ask every question. Then I'm going to take you step by step. So the first step to trade smart money concept is to first identify the trend. So I've been emphasizing this in all my previous video. I've been telling that whenever you come to the market, you first identify the trend. So how do smart money trade? So first identify the trend. Remember, this is the higher high. So remember, this is if it's an uptrend, this should be having some sort of this higher high, lower high, and again higher high, okay, and again lower high, and again higher high, and again lower high. Okay, guys. So in an uptrend market, you are going to see that prices are moving in a zigzag direction. So a zigzag direction means that this is a trending market. So we are going to see some sort of, this is a higher high, this is a higher high, lower high, like that. So we are going to see that at this point we have higher highs. Okay, guys. So and at this point we have higher high, another higher high. So at this point also we have another higher high. Okay, guys. So all these points, those are higher highs. Okay, guys. So another thing we also have, this is lower high. You can see this is lower highs. Okay, so we can see this is a lower high. Okay, yeah, we can see it very clearly. This is a lower high. So in another trend, so first identify the trend. So we are seeing that the market is in a trending direction. So we have higher high, lower high, higher high, lower high, higher high, lower high. So first identify the trend. Okay, guys. So someone may call it higher low or lower high. So after identifying the trend, then if the trend is a trending market, then that is it. So after identifying the trend, now we start also marking up our key levels. But now this is an uptrend. Now since this is an uptrend, so I'm going to show you now the second example. So our second example, we are going to see, since it's a downtrend, you can identify the market. So the first example, I was showing that it's an uptrend. So the second example, I'm going to show you how it is a downtrend. So how the downtrend looks like after identifying this. So this is a lower low. Yeah. So this is a lower low. Okay, guys. So this is a lower high. This is a lower low, like that. Lower high. This is a lower low. Lower high. This is a lower low. Okay, guys. So we are seeing that the market is trending downwards. Okay, guys. Now, as we can see, clear. So at this point, these are its lower lows. So lower low. Okay, guys. This is a lower low. We can see it very clearly. Yeah, we can see it. So we can see it. It's a lower low. Okay, guys. Yeah. So it's a lower low. You can see it. It's a lower low. Yeah, lower lows are around here. So that's a lower low. Okay, guys. So lower low, lower high. So all these points up. So at this point we are having a lower high. At this point we are having a lower high. At this point we are having a lower high. Okay, guys. So as simple as that. So before I continue, please don't forget to subscribe on my YouTube channel, and don't forget to like and share and comment all my YouTube videos. Okay, guys. So there are millions of traders there who are struggling, who are still looking for a strategy. So guys, if you are new in trading, please don't forget to subscribe on my YouTube channel, because this video is more helpful than whatever you need. Okay, guys. So that's the thing. Okay, guys. So now the next thing, now after identifying the trend, now we also have change of character. So we also say that change of character, which is a CHOCH. CHOCH, change of character. Okay, guys. Yeah, CHOCH. How does the change of character looks like? So we have two types of change of character. We have a bullish CHOCH and a bearish CHOCH. Now a bullish CHOCH mostly happens in a downtrend. So we can see that change of character. For example, it was a downtrend. The market was trending down. The market was trending down like this, down market. So we are going to see that this is a change. This one becomes a bullish choke. So a bullish choke has already occurred now. So here we are seeing a bullish choke. Okay. So why is this a bullish choke? Because now the market has broken its lower high. So this is a lower high has been broken. Okay, another lower high has been broken. So the market has already confirmed that now there is a valid change of character. Okay, guys. So this is a valid change of character. But in this valid change of character, we are seeing that now this is a bullish choke. A bullish choke means that now buyers are preparing to push the market upwards. So we are preparing for a bullish scenario. Okay, so this is a bullish choke. A bullish choke, as I was saying, it only occurs in a downtrend market. That's what a bullish choke means. In fact, it shows market reversal in a downtrend. So we are also going to see a bearish choke. So a bearish choke, it occurs in a bullish market. So bearish choke, we can see that the market was trending up. So a bearish choke occurs in a bullish market. The market was trending up. So you can see some sort of pullback. So the market broke all its higher lows. So broke all its higher lows, now forming a new lower high. Okay, guys, forming a new lower high and forming a new lower low, forming a new lower high, forming a new lower low. So guys, we can see that. So this is now a bearish choke. It occurs in an uptrend market. So we can see now so the market is only breaking its higher lows. So the first higher low was broken, then the second higher low was broken. In most cases, for this to be valid, we must see at least now the market dropping down, breaking or at least 2 points. Okay, guys. So that's the thing. So after identifying now the change of character, now we can see now the break of structure. So those are the key points. So how does the break of structure look like? So we are going to see that our break of structure, we are seeing how can we identify a break of structure. So a break of structure, we are seeing that it's going to look like this. So when a candle closes above its high, so at this point we are seeing a break of structure. At this point we are seeing a break of structure. Why? Break of structure has occurred because this candle is closing above. Okay, guys. So a break of structure. Now we can see that this candle has closed above this point. Okay, guys. Now this becomes a valid break of structure. So at this point, this candle has broken its recent resistance. So this is a valid break of structure to the upward. Okay, guys, the valid break of structure to the upward. So at this point, we shall see that more buyers are preparing to come in the market. So this is a break of structure in the upward. So this is a bullish break of structure. That's it. Now we can see also a bearish break of structure. Bearish break of structure may look like this. So it is a bearish. Okay, so a bearish break of structure. So we can see that the market is breaking all its structures. So the market is also breaking all its structures. So we can see that the market is like this. So this is a bearish break of structure. So as simple as that. Now we can also see that first things first. Now what I've said, I've talked about break of structures, the types of break of structure. I've talked about what I've talked about the higher highs and the higher lows. Then I've talked about the choke, change of market structure. So all these things I've been talking all about now. And now the second point, we are going to talk about the liquidity. So liquidity. So what's liquidity? Liquidity, sometimes we can see that is the fuel of the market. So that's when the market can move. So this fuel of the market. Now we can see that. How can you identify liquidity? So we can also identify liquidity when we are seeing equal highs or when we are seeing equal lows. So we can see that at this point, for example, if at this point we have our equal highs, now we can see that if the candle is now showing like this, we can see we have our equal highs. Okay, guys. So at this point, at this point now, we can see that now, if in case now we have now our equal lows, for example, now this market will come around here. So these lows are equal now. So these lows are now equal. So these are the equal lows. So it means that at this point now, there is some sort of liquidity now. At this point, we have some sort of liquidity at this point. So these are now the equal lows. So we identify the equal lows and the equal highs. So what's the equal highs? Now, for example, in our trend, we can see that we have equal highs now. Equal highs are around this point. So we are seeing that there's some sort of liquidity now. There's some sort of liquidity within this zone now. So liquidity is around this zone. You can see now. So there is some sort of liquidity now around this zone. So at this point, we are seeing bullish liquidity. At this point, we are seeing a bearish liquidity. So this is a bullish scenario. Now this is a bearish liquidity scenario. So bearish means that we are going to see more sellers come in the market. So we are going to see more buyers come in the market. So sometimes we also identifying the trend line liquidity. So the trend line liquidity, we are seeing that now. How does trend line liquidity look like? So we can see that since our trend line is sort of this, like this, so the trend line is moving this point, this point, this point, this point. So a trend line liquidity means that we are identifying some equal highs at some point. We are identifying some equal highs or some equal. So it's like this. So this is a trend line liquidity. So we are seeing some sort of liquidity around this trend line. So in most cases, it occurs in a bullish market. So this is a bullish trend line liquidity. Or sometimes we can see that we are seeing a bearish liquidity like this. So it's a bearish, come like this, like this, like this, like this. So like this. Okay, guys. So we are seeing some sort of a bearish liquidity like this at this point. What are we seeing at this point? This is a bearish now liquidity. So now, so all those points should be equal. Okay, guys. So we have the trend line liquidity, we have equal highs, we have equal lows. So sometimes we have a short-term liquidity, sometimes we have major highs and major lows. So we first identify also what are your major highs. So what are your major lows? So that's the thing. So you first go now to the daily time frame, then you identify those major highs and those major lows. So that's the point now. At this point now, so the principle of smart money concepts principle, it is mostly of more of liquidity hunt. So guys, so the market is going to hunt liquidity before moving. Why? Because liquidity is the fuel of the market. Now that's the point. Okay, guys. So in liquidity we have liquidity sweep and liquidity run. Okay, guys. So that's the point. We can see that we have liquidity sweep and liquidity run. Now liquidity sweep. So liquidity sweep is when you can see that now the market or the candle comes, but it fakes out, but later pushes it upwards. Okay, guys, that's a sweep. Now at some point we can see that in this smart money concepts we are seeing about now an order block. So what's about an order block? So an order block, we can also mean like an order block is some sort of a bullish engulfing order. There's a bullish order block and the bearish order block. So a bullish order block can also mean that we have the bullish engulfing bar. Sometimes it can also mean bearish engulfing bar. So I've also talked about an order block. So we are saying that also now a bearish order block. Now, so a bullish order block sometimes is going to push the market up, and the bearish order block sometimes is going to push the market down. So bearish order block pushes now to a bullish order block. We are going to see that it mostly occurs now to form a bullish BOS. So that's a bullish break of structure. So a bullish order block is one which will occur. Now at this point we are going to see that there was a bullish order block at this point. So if you look at this market, we are going to see that at this point we had a bullish order block which pushed the market up to this point. So a bullish order block was around this zone. So we have some bullish order block. So we wait for the mitigation. So for what's the entry rule for the bullish order block? So wait for the 50% retracement entry. So we shall wait for the 50% retracement. So around in the middle. So that's when we enter. So that's the rule for the order block. 50% mitigation or B entry. Or okay, at some point also we are going to that a fair value gap. So a fair value gap, you can see now when prices moves very fast, it means that it's going to leave some other gaps which are not filled. Okay guys, so there's some sort of imbalance in the movement. Okay guys, yeah. Then now we are going to see that when prices are opening like this, so we can see that prices are opening very fast, are running rapidly. So we are going to see some sort of fair value gap. So those gaps are being left in the market. So now at some point we can see that at this point, at this point we shall see that now the market will come back after some time. The market will come back to fill all these points. So that's a fair value gap. Now a fair value gap is also a confluence for an order block. So the confluence, so the market will return to the fair value gap to rebalance now. Okay, when the market fills, when the market moves very fast, just be waiting for the market is going to return now to fill all those zones now. Okay guys, so now someone may ask, so what's your entry system? So what's your entry system? So the entry system, you can say liquidity, sweep liquidity. Okay guys, so now now from here I'm going to show you now here on the chart how it looks like. Okay guys, so price returns into bullish. So we are going to see that an order block plus a fair value gap. Okay guys, then a price 50% order block plus fair value gap. So we are going to now combine. Okay guys, so there are two things which I've talked about. I've talked about change of character. I've talked about change of character. I've talked about break of structure, change of character, break of structure. I've talked about liquidity. I've talked about fair value gap. I've talked about now the retracement. So the retracement, so we are going to be combining. So we are going to be combining now an order block plus a fair value gap. So plus the 50% retracement. Okay guys, so we are going to be entering at the 50% retracement. Okay guys, so also pressing the stop loss above the order block. Okay guys, so now then how are we going to exit now? How are we going to exit? So the way we are going to exit, we are going to exit the market now when the imbalance is shown. Now whenever you're trading smart money concepts, our exit rule is around when the imbalance is already filled. Now we exit the market. Okay guys, so or when the higher time frame order block is mitigated, or when the internal liquidity or external liquidity is also seen. Okay guys, now at this point I can show now all the past data. Now we can see that now let us go to the previous example. We can see how prices were moving. Okay guys, so at this point now we can see that now first things first. So I'm going to show you how a bearish liquidity now. So we are going to see that first thing I told you, first identify the trend. After identifying the trend, we are going to now identify order blocks. So how does an order block look like, and how does liquidity look like? So our liquidity is going to look like this. So we are looking for liquidity. So where are the liquidity? So we are going to see that this is our equal highs around this point. We are seeing some equal highs around. So we have our equal highs around this point. So there's liquidity, our liquidity is around this point. Okay guys, those are our equal highs, and these are our equal lows. So there is some liquidity around here. So we can see that since there is liquidity around here, prices will be motivated. So after identifying the trend, remember what is our liquidity around here. So we are going to see that now this is a bearish liquidity. It's around this point, bearish liquidity. Okay, so prices will dropping down. Now we are seeing some break. Our prices came like this. Prices came, so there was a liquidity sweep up, liquidity sweep. So prices came, broke, came like this, came like this, came like this, came like this. Prices, if you're seeing clearly how prices were moving, so at this point we can see that now. So the first point, we have identified our equal highs. Now the second point, we are going to identify our order block. So what's going to be our order block? Also we are also going to identify our fair value gap. So our fair value gap, we are going to see that there was a gap left when the market was leaving. Okay guys, so when our left, we are going to see that there's a fair value gap. Okay guys, we can see it. So all there is an imbalance. Okay guys, so in this point, we can see here there is a fair value gap. So fair value gap, and this is now an order block. So we have identified our order block. So our order block is around this point. You can see this is an order block. So that combination is around order block. So this order block prices, at some point they will turn now. At some point you will see prices coming back to fill around this zone. Then whenever prices comes in this zone, so it will be now mitigated. Okay guys, if you can see, if you are trading on order block, and we say that to enter another order block, we trade the 50% retracement mitigation. So now, as I've told you, so prices are coming back on this order block OB. So now the 50% mitigation, then we enter. So our stop loss will be now around. So if we enter in the 50%, so we are going to see that our stop loss is below our order block. So set our stop loss below the order block. So slightly below the order block, then you set your TP to the nearest imbalance. So what are we going to look for? We are going to look for the imbalance. So on our left, what are you seeing? We are seeing that there is some sort of liquidity up here. So we are seeing some equal highs. So at this point, we are seeing the body and we are seeing the wicks. So this was an equal high here. So this was our exit at this point. So we were around exiting around there. So that was our first exit. So a person who entered around there, so this was his or her first exit. So it was a good setup. You can see this is a setup. This is 1 to 3 to risk to reward ratio, or 1 to 6. Okay guys, so it was a good setup. So okay, I identify the order block. So also liquidity, order block, liquidity, what are your equal highs? Okay guys, so a trend line liquidity. So I want to show how a trend line liquidity looks like. So a trend line liquidity, sometimes we are going to see prices melting off. Okay guys, the trend line. Okay guys, so we are going to see that. So at this point we are seeing a trend line liquidity. Trend line liquidity is around here. So this is a trend line liquidity. Oh, okay guys, so at this point we shall see that at some point prices may want to come and fill. So that's a trend line liquidity. So we have an external liquidity and an internal liquidity. So external liquidity and internal liquidity. So at that point now, so that's the first setup I showed you. So that order block mitigation. Then also now we are going to see that at this point we are seeing a fair value gap. So the fair value gap, now whenever, first thing is first, I can first show you. So at this point prices have already left this gap. So now there is a lot of gap to fill around this point. There's some gap left here around this zone. So when this order block was being mitigated in the 50%, so there's a fair value gap which was being left within this zone. So at this point we are seeing that in this zone here, the fair value gap was being left. Okay guys, now when the fair value gap was being left, so we were expecting that at some point prices will come back to fill this gap, then we shall continue to the upside. So in our left we can see that at this point, in this zone here, prices came and filled. Now they started now pushing in the push phase. Okay guys, so that's the first thing now. Okay guys, so I think this strategy, it works very well for all beginners and expert traders. So if you don't know how to trade this concept, you just need to follow what I'm showing you to do. It's just quite simple, and it can make you a lot of money with time when you master it. Okay guys, yeah. Now I'm also going to show you how an order block looks like. in the 30-minute time frame. Okay guys, so in the 30-minute time frame, if you can have a clear view of it, how an order block looks like in the 30-minute frame. So in the 30-minute time frame, we are going to see that there's some sort of fair value gaps within here. So this is a fair value gap. Someone may ask, how does a fair value gap it looks like? So a fair value gap, when prices are opening in a previous day, in the next day we can see candles fail to jump, prices tend to move faster. Okay, so this is a fair value gap. So we expect that at some point prices will come and fill this gap after some point. Okay guys, so, and if you do your research, you can see that prices will come and fill that point. Okay guys, so that's a fair value gap. Also here we are seeing some sort of liquidity. Okay guys, so what's some sort of liquidity? But as I've told you, we first identify our order block. So our order block is around this point. This is an order block. Our order blocks around this point. So we have a bullish order block. So this is a bullish order block. So bullish order block is one which is going to enable us to mitigate more prices, or it's going one which is going to enable us to find our entry. So when a bullish order block is being formed, so we are going to wait for the 50% retracement, then we enter. So at this point, this was the first retracement. It was around now here. So the first retracement, this is a first retracement. So prices, so in this it means that now for this candle the 50% is around this zone here. So this was our best setup. Okay guys, so this was our best setup, and as simple as that, now we can see that this was a bullish, this was a trend line liquidity. So we're seeing that there was some sort of liquidity around here. We are seeing some sort of liquidity around here. So it's a bullish liquidity. Okay guys, so at some point we are seeing that prices are going to come. Prices are coming like this. They are moving like this, moving like this, moving like this. Okay guys, so if you can see very clearly how this setup is moving, you can find it. So how it was moving, and an order block was being formed within the trend line liquidity. Okay guys, so I told you how can identify the liquidity. Just mark the equal highs, mark the major zones, mark the major lows, mark the major highs. Okay guys, so we can see very clearly on this point. Okay guys, so that's what we are seeing. Okay guys, so we are also identifying some fair value gaps. Okay guys, so this is a fair value gap. So this is how a fair value gap looks like. You can see it very clearly. This is how a fair value gap looks like. Okay guys, so this is a bearish order block. Bearish order block looks like this. So we are going to mark this bearish order block. Our bearish order block looks like that. But in most cases, this was a failed setup because we were against the trend. Okay guys, so there was change of character or change of market structure. Okay guys, yeah. So how can you identify a valid break of structure? So a valid break of structure, we are seeing some valid break of structure in this point. So break of structure, and our TP is around